Hello and welcome to Traders Corner. With me in studio, of course, is Garth McKenzie, who is the founder and editor of Traders Corner. Garth, thanks for joining us. So we're starting off taking a look at the S&P, I believe.
Yeah, that's right, Samay. We start with having a look at the weekly chart of the S&P 500 here. What I mean by weekly chart is that every candlestick pattern that you see on this chart represents 1 week worth of trading activity. And it's a bigger picture. It goes back over just more than 2 years that we're looking at here. And what is significant, obviously, is the break below the rising trend that we saw at the end of last year in October. We saw that very violent sell-off into December, and then we've seen quite a swift rebound in the market since then. What I've been monitoring over the last couple of weeks is the 50-week moving average, which is this blue line on the chart over here. What we've seen historically at the start of new bear markets is that the market breaks down below that 50-week moving average, then it rallies and it fails at the underside of the 50-week moving average before then dribbling lower again. So the big question at this point in time is whether we're going to regain that 50-week moving average from here, or whether we're going to stall at this sort of area or just a little bit higher and then start to consolidate and maybe pull back for another leg to the downside. I think that's going to be quite critical. What's also notable is the assessment of this recent sell-off comes in at around about the similar area where the underneath of that 50-week moving average comes in. So, this sort of zone where we are now, around about 2740 or so on the S&P 500 is quite significant. Daily chart of the S&P 500. And what this does really is zooms in over the last 6 months worth of trading activity, just to see a more recent picture of how the market looks. Right. And there you see the sell-off that we saw began in October last year. It had that next big leg to the downside in December. And now we've seen the rebound, which has been very swift. It's now approaching 15% off the lows. And what's notable is that the market is now approaching the underneath of the 200-day moving average here, which is that red line on the chart there. So you can see that this 2740 sort of area is a multiple, there's multiple levels of potential resistance there from the 200-day moving average, from the 61.8% retracement that I mentioned on the previous slide. What's interesting now is that, and I think what's been propping this market up certainly over the last couple of days, and if not before that, is that the Fed looks like it's done a 180 degrees about turn in terms of its outlook. The Fed and Jerome Powell had been quite hawkish on their rates outlook, and all of a sudden last week at the FOMC meeting they come out with a far more dovish tone, suggesting that we may not see any further rate hikes, and the market, I think, has taken some heart from that. But we'll see how things unfold from here. There's different ways to view that. One could argue, are they holding off on rates because the economy is not so strong, or has he been pressured to hold off? There's a number of possibilities to the possible scenarios there. But nevertheless, the fact that he's taken a slightly more dovish approach now seems to have been well received by the markets.
If you look at the market performance specifically over the month of January, what are you seeing in that space?
Well, I mean, we've seen this very big rally. It's one of the biggest rallies that we've seen on the equity markets, and particularly we're talking S&P 500 now. It's one of the biggest monthly rallies that we've seen in many, many years. Whether this is just a counter-trend bounce in what could be a new bear market remains to be seen. And I still wonder whether we're not going to have some sort of maybe like a 2015 kind of scenario where the market bounces now, but it does then still take another leg lower, a bit more wobbles before the Fed then decides what its next move will be. I'm cautious. I'd be cautious on going long here. I think the market's looking quite stretched, and I think I'd want to see some sort of a reset and maybe a pullback from these levels.
All right. Top 40 future?
So top 40 future, this is the March top 40 future. It's locally now. It's been rather dull over the last number of weeks. You can see the market has basically been hugging this 48,000 area for the last number of weeks. But it does seem as if it's potentially starting to move away from that area as we sit here right now. There's a rising channel that goes back to the beginning of December there, and then there's a smaller little rising channel within that, which has been broken to the downside over the last day or two. If I just zoom in a bit on an hourly chart over here on this top 40 future now, you can see that more clearly, that channel. So, but this being an hourly chart, every candlestick pattern here represents 1 hour worth of trade. What's notable is the break below 47,800 that we saw yesterday, and that breaks the market down below the bottom of this channel. And that potentially points to a downside target of around about 46,600, which conveniently lines up where there's a gap in the chart from earlier on in January. What we typically see with this top 40 is that very often those gaps do get targeted. If not immediately, it might only be a few weeks later, as the case is here. But it's quite common to see that those gaps do get filled at some point in time. Now, the fact that the market's broken down below the bottom of this channel that I'm identifying there suggests to me that we could be heading lower in the near term towards that gap. So on the basis of that, I've actually entered a trade here on the ALMI future. Now, the ALMI it's a mini future. It effectively represents, every point on this future represents R1 per point. So we've gone short at 47,550 on 2 ALMI futures. So what it means is each contract's value represents 47,000 rands worth of exposure. Because we've done 2 of those, we're talking about sort of 95,000 rands worth of market exposure that we've gone short here. My stop loss will be a convincing move above 48,000, and I'm looking for this trade to move down towards the 46,600 area where that gap in the chart lies. It's not a big trade. It's a pretty small position. The risk here, if we get stopped out, the risk is only 900 rand. So it's not a big position by any means, but it's all in the interest of putting a few small runs on the board early on in the year.
All right, let's take a look at last week's trade, which I believe was a short on ABSA. How's that panned out?
Yeah, it's worked out nicely for us, and we've actually banked a profit on it this week. Now, when we sat here in the studio last week at that stage, what I'd said was that Maria Ramos had announced her retirement. The share price had moved up quite nicely on the back of that, and I felt that that move up was probably not justified and that we would see the share price retracing. It then did move a little bit higher after that in the week or in the days after the show. It flirted with our stop loss at 185 rand, but I held off on executing the stop loss. Remember that I always look at manual stop losses. I'm not one that trades with auto stop losses. That's just part of my personal trading style. Ultimately, it managed to move back below that 185 rand area where our stop loss was, and it's been moving down over the last 2 trading sessions. So I've banked a profit on it today. We banked profit at 175 rand and 49 cents. Keep in mind we were short from almost 181 rand. So it's not a big profit. It's 2,619 rand is what we make here. I could possibly have left it to see whether we get a bit lower towards that 165, 170 area. It may still go there, but I decided to exit because what I'd said on the show last week was that my intention was to see it moving back to the middle Bollinger Band. That's those 3 bands on the chart there. It got back to the middle Bollinger Band this morning, and I decided to execute, or to rather take profits on the trade. And also, it does allow us to put some early runs on the board. It's still early on in the year. And just from a psychological perspective, it is nice to put some runs on the board, get a bit of profit in the bank, knowing that you're kind of ahead of the game for any future trades that we look to do. So those were the rationale for taking the profit as quickly as I did. It's possible the share price does still go a little bit lower, but I'm happy to have taken the profit here. I think we've got a fair amount of the rump of this recent move down here now.
All right, so we've got some profit locked in. What are you looking at for next week's trade?
We're keeping an eye on Anglo American this week, and my thinking here is perhaps a little bit counter to what I've seen out there in the financial Twitter universe. What I've seen, a lot of commentators have been identifying this breakout through the top of this sideways channel that we're seeing on Anglo American here. That's been in place since April of last year. The break above 335 rand is a bullish break. There's no question about that. It's making a break through all those prior tops that we saw in the second half of last year. But in this kind of market environment, I'm very, very cautious about chasing breakouts. What I'm often seeing is that breakouts turn out to be false breaks. They suck you in and spit you out. So in light of that, I'm more cautious, and I'm sort of the view that we could be seeing an opportunity here where we're seeing an overthrow through the top of that range, and maybe this is a move that we can look to fade. In other words, we see the breakout, you can potentially short it for a pullback. And In light of that, just to support this, I've put Bollinger Bands onto this chart. Again, those are those 3 lines that we draw around the trading activity there. Essentially, it's a 20-day moving average surrounded by a 1 standard deviation move either side of the 20-day moving average. And what you'll see is that the Bollinger Bands typically contain the trading action of the share price quite nicely. What I've observed over the past year or so is that if you get a reversal off the upper Bollinger Band and you get an RSI sell signal, an RSI sell signal comes when your relative strength index moves above a reading of 70 and then back below 70. That's an RSI sell signal. We've had 4 of those over the last year. Potentially we're about to get the next one now. And if you look on all 3 of those previous occasions, you got the RSI sell signal and you got a reversal down off the upper Bollinger Band, and you saw the price pulling back quite nicely after that. So my thinking is that we're poised to get another RSI sell signal here now. The price has already shown a reversal off the upper Bollinger Band. If we just move to the next slide, you'll see that. There's the reversal candle that I'm talking about there. That was yesterday's trading activity, very clear reversal over there. And we're about to get the RSI sell signal. So my sense is that we could be lining up a possible short trade here, just looking for a move back down towards the recent breakout, so maybe down towards 330 Rand, possibly even 325, where I see quite a lot of support. If we get that right, there's potentially 20 Rand, 25 Rand on the short side that we could see, and I think that your risk to reward ratio for doing that now is fairly low. And then beyond that, once the share price is reset after a pullback, potentially then one could look to get long. But I just think for now, the breakout that we've seen has sparked a lot of commentators saying, oh, it's breaking out, it's going higher. And I just think you've got to be a little bit careful of that conventional type of thinking in this market, because often I've observed that breakouts seem to be failing, and perhaps there's an opportunity to fade that break here.
All right, let's take a quick look then at where we stand with the portfolios, both local and offshore.
Right, so we've got our local portfolio here. We bank profit on the ABSA trade, as I mentioned earlier on in the show. So we're up 2,600 Rand since the start of the year, which is a gain of 1.74% for the year so far. We short the 3 ALMI futures at 47,550. That's what I mentioned earlier on the show this evening. And then on our offshore portfolio, we've got a put option on General Motors. Now, I just need to quickly clarify something here. I made an error on last week's show where I said it was a March expiry. In fact, what I entered was I had entered a March expiry, and I wasn't happy with that. I re-entered the trade. I closed out the trade that I'd done at break even, and I've actually re-entered that same trade with the strike for April at a different price and a slightly smaller quantity. Our total premium payout is more or less the same. So I don't want to get into the details, but in essence, right now that put option is down $80. It's not big. So we're slightly off. We're down 0.5% on that offshore portfolio. And we're watching General Motors. The company comes out with earnings later this week.
All right. Courses coming up?
Yeah, I've got a couple of courses now in the next few weeks. In Johannesburg this weekend, this Saturday, I'm presenting my high probability trading course on the 9th of February. The week after that in Cape Town on the 16th of February. And then out further than that, the 9th of March in Durban. Anybody that's interested in attending this course, please pop me an email. It's garth@traderscorner.co.za, and I'll send you all the information.
And if people are wanting to get a newsletter from you, how do they go about doing that?
Yes, go to traderscorner.co.za, and you'll look in the middle of the page. There's a link for a free weekly email. Click on that, register your details. It'll only take you about 2 minutes, and we will send you an email each Tuesday of every week at around about lunchtime, detailing exactly what we'll be looking at on the show for that week.
All right, let's leave it. And that's where we leave things for Traders Corner this week. Until next time, goodbye.